Last week, JPMorgan released the first report of its new publication on the prospects for alternative investments, including digital assets. A new report is expected to be released every 2 to 3 months. Firm analyst Nikolaos Panagurtsoglou predicted that Bitcoin's price could reach $146,000 in the long term, with a short-term price target for 2022 of $73,000. Digital assets are on a multi-year structural rise, but the current entry point, in our opinion, looks unattractive for an investment horizon of 12 months, as Bitcoin seems to have returned to overbought territory, he explained. A JPMorgan analyst added, "The resurgence of inflationary concerns among investors in September-October 2021 appears to have renewed interest in using Bitcoin as an inflation hedge." Confirming his bullish prediction for BTC in October, he wrote, "Bitcoin's appeal as an inflation hedge may have been enhanced by the failure of gold to respond to heightened inflation concerns in recent weeks." Panagurtsoglou expects Bitcoin's competition with gold to continue, especially as more millennials invest, given their preference for cryptocurrencies. Considering how large the financial investment in gold is, any such displacement of gold as an alternative currency holds great promise for Bitcoin in the long term, he said. However, a JPMorgan analyst noted that for the $146,000 price prediction to come true, Bitcoin's volatility needs to drop significantly for rule-adhering investors to feel comfortable adding cryptocurrency to their portfolios. He noted that BTC's volatility is currently about 4 to 5 times that of gold. The report adds that current volatility is such an issue that Bitcoin's fair price is actually around $35,000. However, the bank noted that the volatility of BTC is declining and that the $73,000 price looks like a reasonable price target for 2022. In addition, Panagurtsoglou said that Bitcoin is very unpredictable, and it is possible both to rise above $146,000 and fall to a level below $30,000. A JPMorgan analyst added, "There is little doubt that cryptocurrencies and digital assets in general are an emerging asset class and therefore are on a multi-year structural uptrend. Digital assets have shown clear gains in the wake of the pandemic, with retail investors joining institutional investors such as family offices, hedge funds and real money asset managers, including insurance companies, in spreading this asset class." This is not the first time JPMorgan has predicted Bitcoin's price could rise to $146,000. The bank first made this bold long-term price prediction for BTC back in January, citing Bitcoin competing with gold as an alternative currency. The bank explained, "The market value of Bitcoin, which is currently $575 billion, should rise by 4.6, which means its theoretical price of $146,000, to equal the total private investment in gold through ETFs or bullion and coins." JPMorgan recently explained that the perception of BTC as a better hedger of inflation than gold is the main reason for the current recovery, which has prompted the shift from gold ETFs to Bitcoin funds since September. Moreover, institutional investors are dumping gold in favor of Bitcoin, considering it the best inflation hedge. Meanwhile, JPMorgan CEO Jamie Dimon remains skeptical about BTC. In October, he stated that the cryptocurrency was worthless and questioned its limited supply. He also said that Bitcoin has no intrinsic value and will be monitored by regulators every time. In May, a JPMorgan boss personally advised people to stay away from cryptocurrencies. Dimon said he doesn't care about digital gold, but his clients are interested in it,